Okay, so good evening, friends. So this video is all about one interesting topic. So today we are discussing about financial market. Okay, so before going to this video, I am suggesting you to watch this video fully. So usually I am not uh, give any suggestions, so but for this video, but in this video I am suggesting you to watch this video till the end. Okay, so from this video you will definitely learn many things. Okay, because if you are getting a good marks in, okay, so full marks in quants reasoning, okay, very good, appreciable. Okay, so if you did not know anything about banking and financial related things, so there is no use of entering into banking sector. Okay, right? So that is why I am suggesting you to watch this video till the end, right? Okay, so I am sure, I am giving the guarantee to you to learn many things from this video. Okay, so today topic is financial market. Okay, so name itself has a meaning. So financial market means there are some financial activities actually going, okay, actually happening. So okay, so we will talk about one by one, right? Okay, so before that, in my previous video, okay, previous communication video, okay, practicing video, some suggestions are there. Okay, I take that suggestion and I try to uh, avoid those mistakes which are mentioned in the comments. Okay, so I really appreciate them to give the given the suggestions. Okay, so okay, anything is from your side, if I felt good, so I have no hesitation to accept it. Okay, so I am telling you this before starting this video. Okay, so so I already tell you that the financial market is the financial things, okay, financial activities actually happening. Okay, so what are all the financial activities, right? Okay, we go into one by one. Okay, so financial market is separated by two topics. Okay, the one is money market, another one is capital market. Okay, in financial market, if person A want money for some his business or some developmental of his, already he's having a business. Okay, from by using the financial market, he actually raise the capital. Okay, raise the capital. So based upon the time we can separate. Okay, if he is going for a short term, we can call it a money market. Okay, if he actually going for a long term, we can call it a capital market. Okay, so these two are very interesting topics, and it has um, many tools. Okay, so based upon the tools, investors are investing. Okay, investing based upon the returns and dividends. Okay, so that, okay, so first we go into money market. Okay, so money market, I already told you that which is a short term money raising tool, right? Okay, short term means up to 365 days. Okay, 365 days. Okay, so in this tool, RBI is regulated. Okay, RBI actually regulated the money market, right? RBI actually regulated my money market behalf of the government and the financial institutions or any corporates. Okay, so if government or corporates want any capital for short term, they try to approach Reserve Bank of India to issue the tools, okay, money market tools to raise the fund. Okay, based upon that, the returns will be given to the investors, right? Okay, so okay, so what are all the tools? Okay, so there are many tools. Okay, from 1 day to till 365 days, there are many tools, right? Okay, so the tools are first one is call money, second one is notice money, third one is cash management bill, and fourth one is what is fourth one is T bill, treasury bills, fifth one is commercial papers, and seventh one is certificate of deposits. So is there anything I missed? Okay, certificate of, okay, oh yes, and another one is commercial bill, okay, commercial paper and commercial bill, okay. These tools are very important when we study about money market, okay, okay, right. Okay, we will discuss these topics one by one, right. The first one is call market. Yes, call market, okay. So call market is doing overnight transactions, okay. If bank, okay, we can take example with bank, okay. If there are two banks, okay, bank A and bank B, okay. Bank A wants urgent money requirement for, if want to satisfied statutory liquidity ratio, okay, because the bank A is not having the money to satisfy some certain point which actually regulated or which actually set by Reserve Bank of India. So bank A wants immediate money, okay. So he actually, okay, not he, bank A actually calls money, okay, calls money to some other bank, okay, for one night means one day payment, okay. So bank B accept his it proposals, sorry, his okay, sorry, it proposals, okay. So then whatever the money bank A asking, bank B actually giving, okay, bank B is actually giving. So after the one day, bank A return back with interest, okay, okay. This is call money, okay. So both side actually win-win situation, okay. So bank A actually got the finance, and bank B is also actually doing business, okay. In terms of this, the both are actually getting benefited, okay, right. The second one is notice money, okay. So notice money is for the period 2 to 14 days, okay. If same bank, if a bank A wants money for 10 days, okay, 10 days expenditure, okay. Okay, for example, bank A is a shortage of money, it don't have even to spend salary for their for its employee, okay. So for that situation, what it actually doing is issue a notice, okay. It issue a notice to in money market. So okay, some bank C is accepting its notice, okay. So okay, I am giving 10 days validity, I am giving the amount for 10 days, okay. After 10 days, bank A will return back to bank C, okay, with interest, okay, with interest, okay. So nobody will give free money, okay. So with the benefit, they actually the process is actually making the business from one side and getting money from another side, right, okay, right. So this notice money is for 2 to 14 days, okay. So okay, so if any corporates or sorry, not corporates, financial institutions or banks or governments wants more than 14 days and within 90 days, okay, within 90 days they actually go for cash management bill, okay. So this tool is also same as, okay, cash management bill, same as what is actually so what is actually we are seeing in previous two examples, okay. So in this cash management bill, the promissory note or the we can call it as a negotiable instrument, okay. So which is released by Reserve Bank of India, okay. So based upon the requirement of bank or government, okay. So for up to 90 days, okay, if a bank wants to, okay, bank or government wants to more than 90 days, okay. So here more than 90 days actually going for treasury bills, okay. Treasury bills actually released in a 3 separate time frame, okay. Up to 91 days and 182 days and 364 days, okay. So actually the treasury treasury bills, the profit for the investor is settled down with the discounted price. Okay, so I will explain it in a detailed manner. Okay, so this discount value means, so initially the agreement was signed by the face value with the discounted price. Okay, so if 1 unit of a treasury bill released with 1 lakh with a discounted of 25,000 for 182 days. Okay, so the investors only pay money around 75,000 because it is discounted price. Okay, so he actually pays 75,000 rupee to purchase the 1 lakh face values promissory note. Okay, that means treasury bill. Okay, that is security. Okay, treasury bill. Okay, so after 182 days the investors actually getting 1 lakh rupee. Okay, so this is a discounted value. Okay, this is discounted value. Okay, right. So the another tool is, we can say it, a commercial paper. Okay, the commercial paper is mostly launched by corporate entities. Okay, corporate entities. So the same thing. Okay, to raise the fund. Okay, so this is launched for 15 days to 365 days. Okay, 365 days, right? Okay, so in this paper, the investors try to invest based upon the credit worthiness of the corporate. Okay, there is no collateral for this paper. Okay, so fully based upon the corporate's credit worthiness. Okay, so that it is little bit risky. Okay, little bit risky. Why? Because there is no collateral and high chance of losing money, right? Not losing money, the fluctuations are there. Okay, based upon the market performance. So investor side, they may lose their money. Okay, so that is the thing. Okay, so the another tool is certificate of deposits. Okay, certificate of deposits. So it is released by banks and financial institutions. Okay, so from bank side, it is released from 15 days to 364 days. 364 days. In exceptional case, financial institutions launched up to 3 years. Okay, up to 3 years, it is safe compared to commercial paper, right? Okay, so you understand it, right? So then another tool, which one is a commercial bill. Okay, commercial bill. So commercial bill. Okay, so I try to explain it in one example. Okay, so we all know about trade receivable e-discounting system. Okay, so in this process, so there are two entities. Okay, buyer and seller. Okay, buyer try to purchase things which he is actually wanted for his need. Okay, right? So he's actually going for a wholesale dealer, right? Okay, so I am said Mr. Ravi, he is a seller. Okay, Narikutam, he is a buyer. Okay, he is actually going for Ravi to get things. Okay, but the Narikutam saying, so the amount I will pay it to you after 45 days. Okay, 45 days. Okay, so for that Ravi is making one invoice regarding that process. Okay, so get a sign from Narikutam for collateral. Okay, so that is a get a collateral. Okay, if in between 45 days, if Ravi wants any money, he actually going for bank to submit that invoice that was actually collateral for Narikutam. Okay, submitted and get money from the bank. So after 45 days, money actually collected by bank from Narikutam. Okay, you understand it? Okay, so that is called discounted bill. Okay, this discounted bill. Okay, so in between, okay, you may have a doubt about, so in between 45 days, in between the bank want any money, so bank is tried to submit it with Reserve Bank of India. Okay, Reserve Bank of India get money. Okay, get money from Reserve Bank of India. So that bill is rediscounted bill. Okay, which is very important when we are studying about adjusted net bank credit. Okay, adjusted net bank credit. Okay, so okay, if you don't know anything about that, so I am ready to make a video about this separately. Okay, if you want, I will make it in Tamil. Okay, so if I make it in Tamil, I will explain it in very detailed manner. Okay, so okay, I almost finished every tool, so all tool in money market. Okay, so okay, then we move on to wait a minute, we will move on to capital market. Okay, so capital market is a capital market is a also raising a fund for more than 1 year. Okay, more than 1 year. Okay, so in this capital market we have two different points. So those points are two types. Okay, one is a primary market and another one is a secondary market. Okay, in primary market, what okay, in primary market there are some tools. Okay, there are some tools. Okay, wait. Okay. In primary market, the company tried to issue the new shares. Okay, new shares. Okay, in secondary market, the company in secondary market, the investors are actually traded by using purchased shares. Okay, purchased shares, we can also call it share market. Okay, in share market what is happening, one investor is actually getting a share from the initial offer from one company. Okay, getting that purchasing that share, he is actually selling it in secondary market to the another investors. Okay, that is called share market. Okay, now you understand it. Okay, right? Okay, so in this tool there are many types. Okay, in primary market we have IPO, initial public offering. Second one is a FPO, follow on public offering. Third one is a right issue. Okay, so okay, three tools are very important. Okay, we try to discuss about these things in simplified manner, right? Okay, so first one is initial public offering. Okay, so what it means, so initial public offering is a company wants to raise a fund through the share market. Okay, so first of all I want to tell you that money market is managed by Reserve Bank of India and capital market is managed by SEBI, Security Exchange Board of India, right? Okay, right. What I'm saying, okay, initial public offering, company tried to raise a fund first time in to listing its company in share market. Okay, right? Okay, so for example, okay, in real time example, I think 2019, okay, LIC went for initial public offering to sell its 3.5% share for 21,000. Okay, that means LIC wants fund so that it sells its 3.5% share, okay, to the public or investors. Okay. There are many things, so I will explain it in later. Okay, second one is the follow on public offering. Okay, follow on public offering, that means, so second time or third time they want to issue a fresh money, issue a fresh share to raise the fund, that we can called follow on public offering. Okay, second time, first time means initial public offering, second time means follow on public offering. Okay, so then the third tool is what it tools mean, what the tool name is, right issue. Okay, right issue. Okay, right issue means the shareholders, okay, in initial public offering, okay, they actually purchased some shares in initial public offering. Okay, the company tried to release extra share to its existing shareholders. Okay, in that situation, in that process, right issue, the only persons or only investors are eligible is already purchased persons, already purchased persons are only eligible for getting the loan, purchasing the shares. Okay, these three topics, okay, these three types are in capital market. Okay, so I want to explain it. What is share, equity, and debentures, bond, and derivatives. Okay, these 5 or 4 things are very important when we are investing it in share market. Okay, so what is share? Okay, share is the unit of the ownership of the company. Okay, ownership of the company. Okay, equity is the actual value of the total share. Okay, total share. Okay, or means actual value of the ownership. Okay, no, you can remember it as ownership of the total value of the shares. Okay, so okay, I'm explaining it in example, with the example. Okay, so if I'm going to purchase a share. Okay, so that means I will be the one of the owner of company A, because I actually purchased a share from the company A. Okay, so okay, I purchased 10 shares from that company. Okay, the one share value is 500 rupee, right? I purchased 10 shares. Okay, so okay, the total number of shares are 10. Okay, I purchased, one share value is 500. Okay, the total value I spent for that is 5,000. The 5,000 is actually an equity. Okay, equity, I spent 5,000 for company A to get that equity. Okay, equity is a ownership, also ownership. Okay, don't try to confuse it. Okay, so these two are very important. Okay, okay, share gives voting rights. Okay, share gives voting rights, right? So if you are buying more shares in some company, so if a company wants to take any decision, the company is or not is must consulting with you, because you are one of the main shareholder, right? So without your consideration, the company will not take any decision. Okay, right? That means it has the voting rights. Okay, right? So the debenture is also same. Okay, also same. Then the share. So from the investor side, the investors are actually getting profit based upon the company's performance. Okay, if a company is doing very good, based upon the percentage, the profit also given to the investors, right? Based upon the company's percentage. Okay, in debenture, the fixed amount of profit actually given to the investors, that was actually fixed at initial stage, right? Okay, and in debenture there is a no voting right for investors. Okay, so that is a main drawback. Okay, when compared to shares, bond, debenture is a little bit risky. Okay, because it has no collateral and no voting rights. Okay, so the next thing is bond. So bond is a negotiable instrument. Okay, promissory note. Okay, promissory note, which has a collateral, okay, which has a collateral, a company, a bank, or a government or a municipal corporation try to issue a bond, okay. So if a municipal want to issue a bond, he try to issue a municipal bond, okay, for raising the fund for any project, okay, any future project, any project, okay. So because of issuing the government, so the collateral is actually a government, okay. So bond is actually much more safe than debenture, right? So the bond is actually for raising a fund, so from government or a bank issuing it is more safe, okay. If a corporate is issuing, okay, no problem, but those are not much safer than the government and banks, right? You understand it? Yes, right. So then another one, which one is left, says derivative. So derivatives also same, we can call it as a bond, which values are extracted from underlying assets like share, gold, rupees, okay. That is actually a written document based upon some value, okay. So if I can say it, what can I say, sovereign gold bond, okay, sovereign gold bond, which is also considered as a derivative, okay. So because it is a written document which value is derived from actual gold, so whenever the gold value fluctuate, okay, so the profit is based upon the market performance, okay. So derivative also a good investment, so but it has negative impact because it based upon the market performance and many other things. It profit actually decided, okay. So whenever you are purchasing derivatives, try to think twice before investing it, okay, right? Okay, so and you may have some doubt about the mutual funds. So mutual funds also investors, okay, mutual fund companies is a investing company, okay. What they are actually doing is they are actually getting money from multiple investors, okay, individual investors. They are getting money and put it in share market, getting share market on investment tools, okay, getting profit based upon your investments. They are actually split the profit into the investors, right? Okay, they are actually pooling money from the many investors and invested in it in another tool, getting a profit and having some percentage with itself and balance it given to the investors based upon their percentage of investment, right? Okay, these are very important tools, okay. So if you are going to banking job, okay, if you at a good position, you have money in your hand at a certain time, okay, after 1 year or 2 year, okay. So if you know about these things, okay, so your job is to invest your money in correct tool. You will get more profit or more money than your salary, okay. So in that way these topics are very important, okay, very important. So that is why I am telling that getting a good marks in quants reasoning is okay, very good, okay. Knowing the banking and economy and money, oh, these topics are very important for life, okay, because money is very fundamental and essential thing to live a life peacefully, okay. So many people will deny it or many people will accept it, but the truth is, from my point of view, money is a fundamental tool for anything, okay. Whether it is a happy, whether it is a sad thing which is happening in a person's life, the core root is money. Okay, so try to learn how to earn a money is a very good thing. Okay, so I hope so my contribution from your side to learn these tools is I think I'm doing it better way. I think okay, so in some way it helps you. I'm really happy. Okay, so you have all rights to give suggestions about this video, so I definitely read all your comments. Okay, so once again thanks for watching the video till the end. Okay, so it takes 30 minutes, okay, without using any single word apart from English. So so i i have some confidence after this video. Okay, so I know that my fluency is not good, but I am improving. Okay, so that is I am telling you. So if you want to go for a PO job or go for anything marketing, try to learn English or try to speak English. Okay, so communication is essential. Okay, it will reduce half work. Okay, so I will meet you in next video. So okay, tata, bye bye.